Hi, welcome to Hospitality Live with Rupesh. Each week, we feature an industry leader that will share the latest trends and the best strategies to help you grow. Now, welcome your host, Rupesh Patel.
Hey guys, welcome to the show. Welcome to the show, guys. Pull this off. All right, guys, we are live. Guys, welcome to the show. I'm super excited about this conversation. This is episode number 52. That means 1 year of me doing this. I can't believe I've been doing this for a whole year. It's been pretty amazing to connect with so many people like yourselves these last few this last year. I can't believe it. We've all kind of been through a lot this year, and today's episode is going to be super awesome because we're talking about the road to recovery, how to create a budget for 2021, featuring the hotel financial coach, David Lund. He's super awesome. I just spoke with him. He was actually on my show last year, so you got to check that out. I'll find out the show number and let you give you that information. Guys, comment and let me know where you're watching from. Let me see if I can pull this off. Stop sharing this. And guys, comment, let me know which city you're watching from, because we are giving away a $50 gift card to my sponsor, smartguests.com. And thank you so much. I'm getting a lot of congratulations for being, 1 year. I can't believe it's been a whole year that I've been doing this every single week since August. As soon as I got live as a feature for LinkedIn, I was like, you know what? I'm going to do this. And I've been talking about this for like 10 years. I'm like, one day I'm going to do this. One day I'm going to do a show or do a podcast, and I just kept putting it off. I kept putting it off, and the day I got the announcement from LinkedIn, they're like, "Hey, you got it." I'm like, yes, I'm gonna actually start. This was a sign from up above that I needed to start this, and I hope that you've enjoyed this last year. And I want to thank you guys because of you joining this, it's been super powerful for me to keep sharing and bringing these amazing people on. And I'm super proud of this past year. And we've been through so much, especially these last 5 months. We've been all over the place. And let me just really give a shout out to everybody that's on real quick. And let me start from the beginning. Hey, Ann, good morning. Susan, Ann, Ahmad, Lakshmi, Darsh, Nawad, Christopher, Justin Baker, Darwin. Welcome, Demetrius from Jacksonville. Christopher, Justin, guys, let us know where you're watching from. There's a bunch of people on. Guys, thank you so much. I'm going to just really post everybody on where you're from. Hi from London. Hi from New York. Hi from Vegas. Yes. Germany, I love it. Guys, today's episode is all about marketing. Not about marketing, accounting. Marketing is one of my favorite subjects. It's all about accounting. You're going to learn how to increase your bottom line, find out ways and items that you need to add or delete off your budget. We all need to add something or delete. You're going to find out what right in the show, and you're going to discover tips on how to make your hotel profitable again. Now, if that's not going to happen this year, for most of us, I would say more than 90% of us it's not going to be a profitable year this year. But guess what? Next year, there could be some opportunity based on what happens with this whole virus, right? And the vaccine and some of those things. So we have to get ready right now. And this is budget season for most of us, guys. And let me put this banner up real quick. And let me see. All right. Definitely comment which city you're watching from, and I'll keep sharing your city. And but guys, what month do you work on your budget for next year? I would love for you to comment. Let me know in the comments right now, what month do you start thinking about your budget for 2021? Typically, it's August, September, and it really varies. And some people always, might even do it in November, December, based on how they operate and some of those things. So guys, comment, let me know. I would love to learn what you guys do as far as a budget. And then real quick, every week I do a mindset. And this week's mindset, let me pull this up real quick. It is right here, and it is this. Let me see if I have it right. All right, there it is. All right, so hold on, let me see the comments real quick. All right, so some people are saying September, August, September, October. Yeah, this is the perfect time for us to learn this right now. And guys, all right, so the mindset for this week, every week I share a quick mindset, and this week's mindset is, can a hotel GM be successful running multiple hotels? So can one GM run 1 or 2 properties or 3 properties or 5 properties. Now we had over, 30,000 views and 145 comments in here. So go back 2 days on my post and check out the comments. What do you guys think? Could a hotel GM, a manager, general manager, run multiple properties successfully? That's the kind of the question I want to ask you. And for me, I wrote yes, they could, as long as you're organized, you're flexible. I wrote these down. Hold on. You could delegate, right? That's a huge part when you're running multiple teams and you're running multiple hotels. You're supportive. You have a supportive team under you. That's a huge thing that you need when you're running multiple properties. Or if you're just running a huge property and you need all these different team members and departments, yes, you can run this multiple organization. And guess what? You also need to be a strong decision maker. And let's see what people are saying. They're saying yes. I mean, across the board. I want somebody to say no, and the reason why, because there are some valid reasons in the comments here on this post of why. And I definitely understand why that could be based on experience, right? If you don't have experience of running multiple properties, or you've never seen a friend run it, or you've never done it yourself, it might be hard. And yeah, absolutely, people are saying yes. And there's no right or wrong answer. I just wanted to throw that out to you. And really, it's a mindset when you are running a big organization or multiple properties, right? It is definitely a thing that you have to consider when you're even looking at maybe an opportunity right now. If you're furloughed or been laid off, this is an opportunity where, hey, are you ready to take on a big property or a few properties and be the GM there running around, right? Your hours might increase. It really depends on your focus, yes, and of course how flexible you are, right? All right, so that is my mindset for this week. And guys, this week's episode is definitely brought to you by smartguests.com. Guys, let me take this off. And guys, smartguests.com. And by the way, the person with the most comments here on the show is going to win a $50 gift card to smartguests.com. But before the end of the show, I'm going to pick one person that is going to win a $50 gift card to smartguests.com. Guys, smartguests.com. Keep your guests safe with communication tools. SmartGuests offers creative hotel tools to improve your operations, marketing, customer service. And guess what? If you need more reviews right now, go to smartguests.com and use our tools so you can get more reviews, more positive reviews that can improve your ranking and your rating. So thank you so much to Smart Guests. Guys, bookmark that right now and hit it up after the show. All right, so on to the show. Let's see. All right, so we have a bunch of people still commenting. Guys, let us know where you're watching from. All right, so this week, this episode is super important because this is a time that we all need to focus on our budgets. We're looking at it right now. We're probably going to do ours in September based on what's happening. Most of us are down. People are asking like, oh yeah, who's that 10% that might be up? And guys, there are hotels that are up because of the location, because of maybe where they are for the majority of the United States, at least. Most hotels are down, but there's a small pocket of hotels that are seeing an increase in revenue because of their location, or if they're an extended stay hotel. It really depends on a lot of things that as far as how your business is running and operating and maybe even being profitable. So some hotels are hitting their budget, most are not. And today we're going to talk about those. So let me just introduce the show real quick. All right, so today is how to create a hotel budget for 2021, which we all need, featuring the hotel financial coach, David Lund. David Lund teaches all of us financial leadership. He has a mentorship program. He does one-on-one coaching. And let me just bring him on real quick because he's going to share a bunch of tips with us. David, welcome to the show.
Hey, thank you, Rupesh. It's great to be here. Hi, everybody.
You were on way before this pandemic, and you shared a bunch of tips on budgets and marketing, and now things have totally changed. What's happening in the world of accounting and budgets for hotels? You've talked to this past 4 or 5 months, you've talked to a lot of hotels. What's happening with those hotels right now?
Well, a lot of them are really down in business, and they've furloughed a lot of their staff, but they're slowly getting back to normal. A lot of markets are coming back fast. They're bringing their staff back. They're trying to find their staff. That's a hard thing for a lot of people because they've moved on to other jobs. So finding your staff, holding on to them. And then a lot of managers and mid-level managers are telling me they're now doing 2-3 jobs. So the new model is going to be very conservative. It's going to involve people doing multiple things compared to what they used to do, at least until we get back to, where we were in 2018, 2019, which is going to take a while. It's going to take, a couple of years, I think, at least for the entire nation to get back on its feet. We need the vaccine and all those fun things, but multitasking, I think, is the one thing that people are finding very challenging.
Yeah, and David, I got to be honest. I got to confess. A while back, years ago, I was afraid of opening up QuickBooks. I was afraid of looking at my numbers because I didn't want to see the truth. And there's people that are afraid right now, and we don't want to say comment because I know there's some people that are watching that are afraid, and it's okay if you don't understand it. Guess what? That's why they have people like yourself out there that are going to help teach us and be confident in our operations and kind of and show us exactly what to do. And this book kind of helped me out, along with a bunch of people online and mentors that helped me out, that could continue helping us grow and understand what it actually takes to run a hotel.
Yeah. And I always tell my clients, remember, 99% of you have an accountant to do the heavy lifting. Mm-hmm. This is not accounting that I'm going to teach you. It's business thinking. It's how to run your business. Now, we do need to understand some concepts, but they're not difficult. And, I grew up in operations the first 10 years in rooms and food and beverage. I didn't know anything about accounting. I didn't know anything about reading financial statements. And I thought it was like really difficult, really hard. And I was on the other side of the bridge. But now I'm moved over to, the greener financial side of the bridge. I look back and it's really no mystery if you have someone to guide you and teach you and flex those muscles, exercise, and you will learn very quickly.
Yeah, absolutely. It's not a scary thing once you learn the fundamentals. And then once you go deeper into, somebody sharing, this is how you do one part of it instead of learning the whole thing. Because if you read the entire book or you learn the entire scope of it, you're like, oh my God, where do I get started first? And that's what a lot of people fall into that. They fall into that pit and they're like, oh no, I just won't do it. And so they walk away or they hide from it. Do you see a lot of that happening?
I do. I have a lot of people say, I was born without the financial gene, and I always chuckle to myself because I know they just haven't, had any help. They haven't flexed those muscles. They haven't exercised. And I've worked with all kinds of people over the last 7 years, and I've never had a client that I wasn't able to help.
Good. Well, today we're going to talk about what's happening right now as far as the industry, and then what do we do to kind of plan for the future here when things are up and down every single day or weekly, or who knows if we're going to have to close again. So how do we actually create a proper budget for next year or even the next couple months when we don't know what's going on?
Well, a budget is a plan to run your business. It's a plan with numbers. And as the old saying goes, and I said this on the intro last week or whatever, if I don't have a map, any road will take me where I want to go. So we need to look at our budgeting process like it's a map. And if I want to take a journey, I have a map, but that's not the only tool I use to get to where I'm going. I have my GPS, I have my reading glasses, I have my gas gauge, I have my bank account. I have all those things to go along with my map that's going to help me on my journey. But, our goal is to get to the location. But just like what happened this year, maybe our location changes and maybe I need to adjust, but I still need my map to figure out, how will I get to my second location? So there's really 5 components that people need to put together in order to be able to run their business with a budget. And
all right, so five. Let's go into the 5 things. All right, the 5 things. I'm going to write these down too, because I will definitely be sharing this post.
The very first one is a mindset. And the mindset is that, the only one thing we know for sure about my budget is it's wrong. So that's the first mindset. So if we expect it to be right, or if we're putting together the budget we think is going to be right, stop right there because it's going to be wrong. And people get hung up on the business thinking and the numbers thinking it's like grade 10 math where there has to be the right answer. It doesn't work that way. It's simply a guide, something we can pull out and go, okay, things aren't working the way I wanted to. How can I switch gears so that I can get back on track? So that's the first thing is that drop your need to have it right. The second thing is that we want to be able to plan our numbers where we're using day by day revenues and payroll, monthly expenses. Those are the three buckets we want to be dealing in. So we want to have a revenue forecast that has every single day of the year. Excel is great for doing that. When it comes to our payroll, we want to have a staffing guide. So a formula where we can determine how much labor I need when I have 50% occupancy, 60% occupancy, etc. And again, it's not difficult. The third piece is we need to have a zero-based expenses. So in other words, when I talk about my expenses, I have a list of everything I'm going to be buying next year. It's organized by my account in the rooms department, the maintenance department, food and beverage if I have it, but it's organized according to that green book you had, the Uniform System of Accounts for the Lodging Industry. So those are the three buckets that we need to have: day-by-day revenue, day-by-day staffing guide, and monthly expenses, zero-based. So that's number 2. Number 3 is we need to have monthly financial statements. So it's no good to have a budget for the entire year and I only look at it once next February when I get my financial statement. That's useless. I need to be tracking my results every month at the very least. So in other words, if I'm using the cash basis of accounting and I don't know what my P&L result is every month, I need to stop that and I need to move into the accrual accounting world and produce monthly financial statements. So get on the phone, talk to your accountant and say, I want to produce monthly financial statements. And a lot of people don't do that because they think, well, it's going to cost a lot of more money to do that. It will cost a little bit more money, but the results and the information you have will pay back. The return on investment for that will be significant. Because just think about this year and all the people right now that don't know if they're going to, how much money they're going to make or lose this year. And they won't know until next February or January when they get their statement. Unacceptable. I need to know right now after 6 months, after 7 months, what's the picture? What's the variance to last year? What can I do? And if I don't have monthly financial statements, I'm up the creek.
So should it be after the 10 days after that you have a tight budget or the tight number for the month prior?
I used to work in a company where we had 3 days to produce the monthly financial results. So 10 days would be great. I think that's a reasonable thing to shoot for. But if you're processing your information every day, your revenues and settlements, which most people do, then you know what your revenues are. So then the second piece is, well, what is my payroll? Well, we have to figure out the payroll calendar because it doesn't line up with the monthly calendar. We usually pay people every week or every 2 weeks. So then we need to just accrue a certain period of payroll, reverse a couple of days from the month before, and then we have our payroll picture nice and clean. And then with our expenses, we just need to have accruals and prepaids. And those big expenses like property taxes and insurance and things, we need to be able to divide those up so that we can be matching revenues and expenses. And again, people think this is complicated, but it's, if you're running a business and your hotel's generating $3, $4, $10 million a year, and if you don't have monthly financial statements, shame on you.
Even if you're running a hotel that makes $500,000, you still need to have numbers in place. So that way you know where your numbers are, and you know where you're going as far as next year. If you increase revenue by 20% or decrease number by 20%, you know where things can be kind of deleted off the budget and added to the budget, right?
I have a client that I'm working with right now, just one example, but they have a 44-room hotel. And at the end of last year, he said to me, David, I'm ready to start doing monthly financial results. We've been running this place for 40 years and only getting a financial statement once a year. So guess what? Right in the middle of the pandemic, we actually got his system up and running. And now he knows where he's at, and his revenues, the latest forecast, are going to go from 2 million last year to 1 million this year. But last year he made over $450,000. And this year he's on track, even with $1 million drop in revenue, 50% drop, he is on track to reduce his profit by less than half of what it was last year. And without this month by month statement, he wouldn't know. And he would not have been able to turn off as many things and look at things objectively without that monthly financial statement.
Yeah, or those expenses that were pretty high, they just kept going and pretty soon you start seeing yourself in the red. And
Well,
that's where your numbers show you the light where you can get out of that loss.
if I don't have a detailed report to go through and go, okay, well, here I'm spending 13,000 a year on security. What can I do about that? Well, it's $1,000 a month, but what am I getting for it? Okay, you know what we're going to do? My in-house manager is now going to be managing security at night on the weekends. And it's dead anyway. So that's one thing I can do. And right away, I've just reduced it by 20%. Okay, that's $2,600. Okay, let's change that number so that when we change our idea of our expense, we change the year-end forecast, and then we're dialing in on that number all the time.
Yeah, and the budget's not, but like you were saying earlier, budget's not the exact number that you're going to make next year, right?
Right.
It varies. It's kind of like an estimate. And yeah, most budgets are wrong. Like the budgets I see, they've never been right. Like you've never hit it on target. There are years that you've made a lot more money than the budget, and there's years that you made less money than that budget. It's okay with
stamp this into your forehead. The only thing we know for sure about the budget is it's wrong.
Okay.
It'll always be wrong, but
Right.
it's a plan. And if I don't have a plan, shame on me. So
yeah,
then,
and guys, and real quick, guys, comment. Let us know how often or when do you close out the end of your month? Is it 10 days, 3 days, 5 days? Comment. Let us know if you have a monthly financial statement. How many days does it take you? Or maybe if you work for a hotel management company, they say please have your close of your financial statement by what date? I would like to know that. And I think that'd be interesting for other people to learn. Like, oh yeah, we have to turn it in by this date. So guys, comment. Let us know. And sorry, David, what were you saying?
I was just going to give you number 4, but keep going.
Yeah, go ahead. Number 4.
Yeah, so number 4 is we need to do a rolling forecast. So once I've done my budget, I set it aside. I put it in concrete. It doesn't change. But what does change is as we roll through the year, month by month, I put together the year-to-date actual plus the forecast to the end of the year to create a rolling forecast. So every month, I'm dialing in on that location that I want to get to. And a commercial aircraft, when it takes off, it does nothing but make adjustments the whole way to its destination. And that's what we want to be doing. And the way we do that is by using the rolling forecast, because if I see my destination moving away from my year-end number, I can adjust. I can go into the details and use my rolling forecast. So that's number 4, create the rolling forecast. And then the 5th one is another mindset, but I want to be able to share the financial information in my hotel. So I have key department heads, my housekeeper, my director of sales, my maintenance manager, my front office manager, maybe I have a food and beverage manager. I want all of them to be part of this process so that they're living it. They understand their numbers. So every one of those 5 steps that I just used, we need to incorporate the team into those and share the financial results. And I know from working with so many clients, that's one of the things that they don't think they can do is show people their numbers. It's kind of like, that 3-letter word that I'm not going to mention. We don't talk about money in our society, and we need to. And I know that clients that move in that direction really understand how powerful that is when I can bring my key managers into the engine room and share with them what's going on inside of our hotel. They really like it, and they get really empowered by it.
Is it the entire P&L, or is it just their department so that they can kind of focus on that?
The entire P&L. Show them. And right now, showing them how bad it is and how much we're bleeding is powerful. And all of us as human beings, we have a basic human need. And the need is to make a difference. Every single one of us, even people in prison, they need to make a difference. It's a fundamental human thing. And by showing your managers that their numbers make a difference and that they're important and that you're counting on them, it's priceless. It creates engagement.
All right. And Carl says, how can I learn to read a P&L budget and do forecast for my hotel?
Can I hear the first part of that? How?
Carl says, how can I learn to read the P&L budget and do a forecast for my hotel?
Well, great way to do it is get a mentor. Find someone in your organization that already knows how to do it. Maybe they can help you. Find someone like Rupesh. Rupesh knows how to read a P&L. Find someone like me. Go on YouTube. Take a course. There's all kinds of information. And reading a P&L is not difficult. It really isn't.
Yeah.
It's designed just like a hotel is by department. Okay, that's a great place to start. Well, what's the rooms department? And one thing that I find with a lot of clients is they're not producing their financial statement, and I'll slow down when I say this, in accordance with the uniform system of accounts for the lodging industry. So they produce their financial statement based on the way their accountant set it up. And it's useless because it's not organized by the rooms department, the food and beverage department, A&G, sales and marketing, maintenance, GOP, all those things that we talk about in certain avenues. But if we can express what's going on in our hotel in a concise format, our industry's Bible, USALI, Uniform System of Accounts for the Lodging Industry, we're going to be light years ahead. So that's the first thing, is learn how to read the right P&L. And that book that Rupesh is holding up, you hold it up again. You can find
it's the 10th edition.
Yeah, you can find it on Amazon, and the 11th edition is out, but it's $300 or $400. Don't buy the 11th edition. Buy the 10th. You can pick it up for $20 or $30 on Amazon used, and it has all the same stuff except for the last bit of updates, and there are not that many changes between 10 and 11. So that's my super tip to save everybody a few $100 a day. Get the book.
Okay.
It shows you the schedules.
Yeah, and Alexander says, how do you handle salary confidentiality when you're sharing the full P&L? You're actually just showing the kind of the top number. You're not showing details of
the details,
like the payroll, right?
So
you're saying share the details of this.
Absolutely. And people will go, oh, look at how much the sales department makes in salaries. And then, as a responsible manager and owner of the business, you have to say to them, look, we need to get over the fact that what you're seeing is the inner workings of our business. I trust you. You're a trusted manager. I trust you to run the hotel when I'm not here. So in order to run it properly, I need to share the financial information. And I used to work for a company. Big company. And one of our policies was that the department managers must receive a copy of the P&L every single month. So in those big hotels, they would see how much the general manager made, because there's one line in A&G called general manager's office, and the only other person in there is his secretary. And they go, he makes, oh my God. And then they would do the same thing. But after they get over it, then they start reading the P&L and seeing what's in there and understanding what's happening. And then the magic starts. So we have to get over this thing about money. It's taboo to show people what we're making. And, I talked to a lot of people, and I talked to a guy just a couple of months ago about this very subject. And he says, David, I have 40 hotels and I don't even give the P&L details to my GMs. I'm going, oh, that's interesting. I said, so how's it working for you? I said, how do you think it would be working if they actually knew what was going on inside of your business so they could help you run those hotels? That's what we produce the P&L for two reasons. One, so that we can keep score. How are we doing relative to our budget and last year? We need to know that every month. And the second reason we produce the P&L is so we can look at the variances. And if we look at those variances objectively, they'll tell us exactly where we need to fix our business to get back on track. It's not to shame anyone. It's not to embarrass anyone. We're big boys and girls. We trust these people with our properties, with our staff. We need to trust them with the numbers. Trust me, it won't be a mistake. You will love the result.
All right, good.
Mindset.
Well, that's the share part of what you're saying.
Number five, share.
Okay. All right. So, really this depends on how you operate your property. There's a lot of things when you're talking about accounting, and you're talking about divulging information. We're not saying we're the experts. You kind of have to do what you want to do when you're running your hotel. We can't say you go share all your numbers and then all of a sudden tomorrow everybody leaves or whatever. We have to do it systematically, I would say.
It's definitely what I would say is a best practice. And I know that culturally it's, maybe some people think it's taboo, but things change, and in our world, having engaged managers and leaders is about trusting them, and it's about empowering them.
Yeah, I 100% agree. All right, good.
Mindset.
So yeah, no, it's definitely a mindset. All right, so we're going to talk about the software that you see when you're coaching these hotels. What are the tools and software that you see, especially for those that don't have a forecast or a budget right now for next year or even this year? What tools are you seeing your clients use? I know
Yeah.
we have M3 and then QuickBooks. What are some other tools that you see? That way people can just go out and research it themselves.
Yeah. The number one tool that I work with clients on is Excel.
Okay.
And, everybody has a financial system. Their accountants produce their financial statements. So they're using software to track all the debits and credits. But really, at the end of the day, what we want to be able to produce is something that we can be very flexible with. So I teach them how to use Excel for scheduling and for doing productivity tracking and for tracking their rolling forecast, doing their budgets, and even their monthly financial statements, because most of these software programs produce reports that dump it right into Excel. So it's very malleable, and it's the best tool by far. Now, obviously, a bigger, more complicated business, we're going to have tools that pull all that information out of our financial reporting system and put it in Excel. And that's exactly what the big players do. The Marriotts and the Fairmonts, they're using Excel to produce forecasts because you can copy one range into another, and you just need to be proficient with it. And again, it's not that difficult. So some of those softwares you mentioned as well are very good, but they require subscriptions and they require, training. But working with Excel, keeping it simple, the old acronym KISS, keep it simple, stupid, it really applies here.
Yeah, and we're talking about budgets. Going back to the uniform system of accounts, this is kind of like they say it's the Bible for the accounting for hotels. And you'll know that you made a mistake is when you're trying to either buy a hotel or sell a hotel, and your system, your accounting isn't in line with this uniform standard for hotels, that you will have to get an accountant to clean everything up, put into the right departments, put into the right categories, and you're going to have to do this. So you might as well start now and be
banks or
clean.
investors won't even look at your stuff.
No, they won't. And even brokers that are trying to sell your hotel, they're like, let me see your P&L. And if it's not broken out to these categories and they're not broken out to these different departments and kind of the way the books, the standard says, you're going to have to go back and do it. So it's best practice if you do it now. And by the way, guys, comment and let us know which tools you're using for your budgeting. And I know a lot of hotels use QuickBooks, use Excel, because I see it all the time when we say, all right, pull out your budget. Let me see where it is. Or when you're looking at buying a property and I see it and I'm like, oh, wow. It's always Excel. It always comes down to Excel.
Yeah. And if you need help reorganizing your financial statements and getting them into the right format, it's not difficult. And it's a matter of producing a rooms profit and producing a gross operating income and then the overhead expenses. And, it's typical example is, people put all of that together so that the elevator maintenance and the security and everything are right up there next to the room revenue, and we're still producing a profit, but we're not looking at it through the right lens. So get help to reorganize that, get on the right foot, start producing it on a regular basis. Because the other thing about our business world is that we repeat the same thing every month. It's what I call the monthly financial circle. And if we complete that circle consistently, it's never going to change inside of our business. And if we get into the habit of doing that, it's like flipping the house. We do it the same way every day, same way with our business. We manage the numbers the same way every month.
Awesome. All right. So now we're talking about 21.
Yes.
We don't know what the business is going to be looking like in 21. We kind of have an idea. We have an idea based on what we just did this year and kind of what last 6 months, trailing 6 months. How do we look at the budget for next year? How do we actually make a decent estimate?
Well, what I would do and what I recommend to any client is get the last 4 years, month by month. Start with your occupancy, break it down by market segment. What have we achieved in January, February, March, and April in those segments? What's your realistic estimate based on our market, based on our RevPAR index, based on our revenue management tools, all the things that we use. And you have to guess. It's an educated guess. But we have to be realistic. We have to start with that. So month by month, what's the occupancy going to be? And then month by month, what's the rate going to be? From there, you produce your room revenue month by month. And then from there, we want to go in and look at it day by day, figure out where the peaks and valleys are, what the segmentation is. If we have groups in our business, if we have corporate customers, if we have leisure customers, what are the different segments? How are they going to perform? What's the rate in my corporate segment versus the group versus the leisure? What are the seasonalities in my location? You know, you have hotels in Daytona Beach. So in the wintertime, that's when the rates go up. So we need to be able to reflect that from the last 4 years into a reasonable estimate for next year. So that's the revenue piece, and coming up with something that's somewhere between the dismal results of this year and the last 4 years is probably where most of us are going to land. And it does need to be reasonably, cheerfully, slightly optimistic, I believe. Doom and gloom is never going to get off the ground. But we don't want to be pie in the sky either. So what would be reasonable? If in the last 4 years, I ran consistently a 75 to 80% occupancy, and my average rate was $100 to $130, and therefore my RevPAR is right around $100 every year. You know, can I do 85 next year? Can I do 80? What would be reasonable? To think we're going to get back to 2019 in 2021, I don't think most of us are going to be able to do that. Some of us will, but most of us won't. So we're going to be, 70 or 80% of where we were in 2019. I think that's a good place to shoot from. And then from there, what's my staffing look like? What are my expenses going to look like so that my gross operating profit, the manager's number, is as close to 2019 as possible? And how can my new normal, where I don't have the top line, but I've got a sharper pencil on my labor and a sharper pencil on my expenses, what's my new normal going to look like for my gross operating profit?
Right. And let's see, hold on. All right, sorry. All right, so what's increasing? I wrote down a few things in the different departments. What is actually increasing in the departments? What are you seeing right now as far as an increase? And we'll talk about the decrease.
Historically, especially in the last decade, it's commissions paid to the OTAs. Every year we're higher than budget because more and more of our business is heading that way. But what we need to be doing then is adjusting our marketing programs and our other services, especially if we're working with a brand, figure out what their forecasts are for next year. What are the programs that they're going to be charging you back for? Adjust accordingly. But a lot of those things continue to go up, but a lot of those are a function of your top line. They're a function of your room revenue. So adjust those fees that are a function of room revenue accordingly. But, labor is another thing. Like, minimum wage is really what drives our labor costs because everything is based on that or based on a step up from that. And minimum wages are going up in a lot of locations throughout the country. And they're going to continue to go up. So how can I be smart about combining positions? When we take a look at my room attendant labor, what's the picture going to be? Because there's a real trend towards guests not wanting people in their rooms. If I'm there for 3 days, I really don't want a room attendant to clean my room. So can I then flex my labor, spend more time cleaning that room when the guest finally leaves? I have a client that has an extended stay hotel and they're introducing COVID cleaning fees. And it's a modest fee, but when people check in, we give them a list of everything that's been done to super clean that room. And we've informed them when they've made their reservation that there's a $19 cleaning fee, but that $19 actually pays for that extra hour of labor that we had to put into super cleaning that room and touching every surface.
Is that a branded hotel?
No, it's an individual owner operated hotel, but they took the decision that they had to put in these protocols. It was a local government requirement. And they also took the position that they're going to inform their guests, because most of their guests aren't from there, what these additional cleaning requirements are, and that they're passing a modest fee along. And, it's an experiment, and they're willing to give it 3 months. But so far, they've been doing it since the middle of July. It's been almost a month, and they've had nothing but positive comments. Guests really appreciate knowing that room has been super cleaned. It's $19. And for most of them, someone else is paying the $19 anyways, because a lot of their clients are corporate clients, group clients.
Yeah.
And you can always, if the guest really is unhappy about it, you can always rebate it, adjust it, empower your people to be, really focused on what the guests' experience are and needs are.
Okay. And then payroll, we're talking about payroll. Most of the payroll is down this year because of layoffs, reduced occupancy, reduced just reservations as far as the hotel is concerned. Where does payroll look like? How do we budget for payroll next year?
Well, the payroll, when people look at their payroll costs, obviously they're looking at the dollars, but what I train my clients to look at is productivity. How many hours per room occupied does it take for me to run my housekeeping department? How many hours per room occupied does it take me to run my front desk? And if I can concentrate on that, wages are really out of my hands in the sense of how much I pay per hour, because it's based on the city's minimum wage or the state's.
Sure.
So if they increase it by $1.50 next year, I have to absorb that. But my productivity, my hours per room occupied, if I operated the hotel last year and my hours per room occupied were 0.75. So in other words, for every room occupied, it took 45 minutes of labor to clean the room, to check the people in. That's a powerful number, because if I can focus my budget next year on doing the same thing, but making it 0.72 instead of 0.75, that means I've increased my productivity by 4%. So if my wage rate goes up by 4%, I've just neutralized that. And that's what we want to be able to do, is concentrate on the productivity, because the costs, the dollars, are driven by other metrics.
Okay, awesome. And, along with payroll is the cost of now the new cleaning standards that most hotels have implemented. What does that look like as far as the future of budgeting and kind of including that into next year, the full year of next year, if this thing continues? And I think it will. I think people are gonna continue, or they're gonna be used to this cleaning process now. They don't want anything less than this for the future. Do you see that happening?
So I see two things. One is we really need to figure out what our average length of stay is, and be able to incorporate that into our budgeting. So if I have a 50-room hotel, my average length of stay is 4 nights. That means I'm going to be cleaning most of those rooms after 4 stays. So here's my forecasted occupancy. I simply divide that by my average length of stay. Now I know how many times I need to clean that room. And I now need to figure out, how long does it take with the new protocols in place to thoroughly clean that room? Is it 1 hour and 20 minutes? Is it 40 minutes? I used to be able to do them in 26 minutes. Can't do that anymore. But what does it take? And how am I cleaning that room? Am I doing it in teams? Am I still doing it the old way where it's one person? What's going to be more effective? And what cleaning materials and what protocols are in place, and how do they stack up from a timing point of view? And I really encourage my clients to at least annually do a time and motion study. People are cleaning your rooms. What are they doing? There should be a formula. There should be a process to clean that room. We start here. We do the following things. We move in a circle. All of those things that a great housekeeper would, have at them, on the tips of their fingers, but incorporate those into the training.
Sure. And the cost of cleaning. Yeah, and the cost of cleaning includes not just payroll, but also the supplies. Now, you might be giving masks away. You might be giving hand sanitizers, mini bottles of something or another. The room gets fogged. It gets put down for 2 days or 3 days. There's different things all over the place.
Yeah.
If you're a brand, now you have the brand standards that you have to purchase through the brand or their partners. And that's an increasing cost for your budget. So consider that for the entire year next year, and probably possibly even 2022. Where do you
Absolutely.
see that as far as an increase? As far as a percentage, where should that increase as far as the cleaning costs?
That's really an individual exercise based on your brand or your location and the local requirements. But it really falls in line with what I tell clients when it comes to doing their expenses. It needs to be on a zero base. So make up a list. And people get confused by this because
What does zero base mean?
yeah, so zero base, the best way to describe it is, imagine if I gave you $200, Rupesh, and I said, go buy some groceries. You come back with $200 worth of groceries. And if I have $200 for my expenses, that's kind of how I manage it. But if I said, hey, Rupesh, here's a list of everything I want you to buy, and here's $200. You would go to the grocery store just like your mom would instruct you. I'm sure you can remember doing this and coming back with exactly what's on the list. Don't buy
I
anything
still do
else.
that. I still do that now when my
Me
wife
too.
instructs me. Don't get off that list.
Yeah. But guess what? Now it's next month. I only have $170 to give you because occupancy's down. And I give you the same list and say, Rupesh, you decide what we're going to go and do without. Now you have a list at least. Now you have a half a chance of achieving $170 and not going over budget. If you don't have that list, again, you don't have a plan. So take the time, figure out, right down to how many rolls of toilet paper and bars of soap and, how many ounces of cleaner and everything it takes to clean that room, and then figure out how many cleans you're going to have to make based on your average length of stay, and make the formula drive the results. That's zero basing.
Awesome. Listen, this has been amazing. Guys, if you really enjoyed this episode and at least wrote down a few tips, please comment and let us know. David, any last words, any last tips that you can share with us? And I know we'll talk about how they can find you too.
Yeah. Our business is challenging. There's no doubt about it. But it's also the kind of business that if we can wrap our arms around what's going on and bring our key managers into the picture, the sum of the parts of a great hotel are that each department manager knows what's going on and can deliver on their part of the result. That's what it's all about. It's teamwork. It's no different than the service component or the colleague engagement. If everybody has a plan for their numbers, I have a much better chance of success than just me having a plan. So spread the news, get people involved. It's financial leadership. It's not accounting. It's business thinking. And it's really what your leaders want, because they all want to be you one day. They all want to be close to the engine room, and you can empower them. So don't be shy.
And this is the way up too. A lot of people are saying, even if you're a front desk or any position at the hotel, if you learned this one thing, this part of the business, you will excel when you're talking or taking interviews or moving forward in your life. Like, I know these numbers. Like, I don't have to be afraid of it. I'm ready to make quick decisions based on my numbers, right? And and you're confident about yourself.
If you want to get ahead in your hotel career, you have to know your numbers. Simple as that.
David, this has been a pleasure. Where can people find you?
They can find me at my website, hotelfinancialcoach.com, all one word. They can find me on LinkedIn. I don't have nearly as many followers as you do, Rupesh, but I have quite a few. People can also sign up for my weekly blog. I write a blog on financial leadership every single week. So go to my website. It'll ask for your email address. I don't share it with anybody. I think Rupesh will also have some stuff that he can send out after our call today that everyone can enjoy, some free things. And as well, if anybody wants to get a hold of me, I'll give you my cell number. It's 415-696-9593. I offer free discovery calls for anyone who would like to discuss with me how I can help them or how I can help their hotel or help their career. So don't be shy. And I want to say thank you, Rupesh. It's been great talking with you and with your followers today. And you do a great service by providing this show every week. And I want to thank you.
Thank you. Thank you for being on the 52nd show, 1 year anniversary, David. This is a big thing for me. Now we have to continue. We can't stop, right? So after you get to 1 year, you just can't quit. You got to keep going. And no, I appreciate it. there's a bunch of tips I wrote down on my book. So I'm going to definitely be sharing these post the show. And all right, let's pick the winner of this week's audience participation. And guys, this week's audience member, they've been posting since this thing started, and every week we give away a prize. And so this week's this episode is this winner is going to win a $50 gift card to smartguest.com, and it is Justin Barker. Congratulations, Justin, for winning the $50 gift card. I loved your comments. I loved your engagement here on this live show. And guess what, guys? None of you are losers too. If you go to Hotel Financial Coach, you'll be able to get some more tips and some free downloads and be a part of his newsletter. And we do this every week. So David, thank you so much for joining us.
Thank you, Rupesh. It's been my pleasure.
All right, I'll talk to you next. I'll talk to you soon.
You bet.
All right, thanks. All right, guys, what did you think about this episode? Thank you so much. And guys, congratulate Justin for winning. Thank you so much for watching my 1 year anniversary show. I can't believe it's already been 1 year. Guys, if this was valuable to you, hit the like button right now and comment that this was valuable. And guess what? Next week is episode number 53. I'm going to bring on somebody amazing that's going to share a tip with you or tips and strategies with you that are going to make you more successful in your life. Guys, please take care of each other, take care of yourself, and stay well. Talk to you soon.